Hello and welcome to another TLC Tutoring Company accounting lesson. In this lesson, we are going to be going over payroll and payroll tax journal entries. So in this video, we have a company, Simi Company, who is running their payroll for February 22nd. So it's probably like the very next day. They're trying to take a look at how much their employees have earned so far, and they are preparing all of their withholdings and recording the journal entry to show how much they owe their employees as well as the government. So here, for each employee for the current period, we see their earnings in this second column here. So employee number 1 earned $1,200 during the pay period ending February 22nd. Employee number 2 earned $4,200 for the pay period ending February 22nd, so on and so forth. To the left of that column, we see the year-to-date earnings on their prior paycheck. So in the pay period prior to February 22nd, they had basically accumulated $6,500 in earnings for employee 1, $30,000 in earnings for employee 2, so on and so forth. So first column is what they've earned all for the whole year up to that prior pay period. And these are the new earnings that they earned this pay period. We also have some additional information below. Federal income tax withholding has already been calculated, so we don't have to calculate federal income tax for this problem. They tell us that Social Security tax is 6.2% on the first $176,100 of each employee's annual earnings. Medicare tax of 1.5% is applied to the employee's entire earnings. And then we have SUTA and FUTA rates that are going to be applied on the first $7,000 of each employee's earnings. So for Simi Company, we want to prepare 2 journal entries, 1 for their payroll and 2 for the payroll tax. So we should be pretty comfortable by now with the 2 items that are required by the 2 main areas that we're going to be focusing on, which is essentially the employer's paychecks, the employee's paychecks, and the employer's payroll tax obligations. So for each of these, let's just do a quick review on what taxes the employer and the employee are responsible for paying. So the employee is responsible for paying federal income tax. They are responsible for paying Social Security and Medicare tax. Now, keep in mind when we're talking about Social Security tax and Medicare tax, these are also referred to as FICA taxes. Now, the employer is responsible for matching Social Security and Medicare, and they are also responsible for paying unemployment tax. So that would be state unemployment tax and federal unemployment tax. So when we're preparing our overall payroll entry, our main focus is going to be on the taxes that are going to be taken out of the employee's paycheck, because this is our payroll. So we need to know how much in taxes we have to take out of our employee's check. So if we go ahead, let me insert a line here so we have a little bit more space. If we take a look at our current period earnings, we see that the total amount that we are going to be paying to our employee and the government for what the work they did is $21,900. This is referred to as gross pay. So that $21,900 is the gross pay that our employees earned while working with us. Now, unfortunately, there are going to be some taxes taken out of that. So whatever tax we take out, whatever's left over and is on their paycheck will be considered their net pay. So let's off to the side here, kind of just play around and figure out what that total amount is going to be for them. Okay, so first things first, their gross pay is going to be that total $21,900. The first item that is going to get taken out of there is going to be their federal income withholding tax. So the total amount of federal tax that's going to be taken out is going to be $5,250. That's the amount as provided in our problem. Give me a second. I'm just going to clean these up a little bit. Okay, there we go. That's a little bit cleaner. So federal income tax was already calculated for us, $5,250. Now, our Social Security tax is going to be 6.2% on the first $176,100. So let's go ahead and put a little column to the left here. And we're going to start taking a look and seeing, okay, well, what exactly is going to be the amount that is subject to Social Security? All right. So if we're going through each of these individually, we are going to notice that some of them have already hit their ceiling for that Social Security, right? So let's take a look at them one by one. The ceiling is going to be $176,100. So employee number 1 is nowhere near that. Employee number 2 is nowhere near that. Employee number 3 is nowhere near that. Employee number 4 is nowhere near that. But employee number 5 gets paid a lot of money at this company. And so what we're going to be noticing here is they are getting dangerously close to that ceiling. We can even see here that if we go ahead and let's add that up off to the side, just kind of this plus this, we're going to see that those amounts are going to actually exceed the ceiling there, right? So they've already been taxed on $170,000 for their Social Security tax in prior periods. So really, they can only get taxed up to $176,100. So for each of these employees, all of their earnings are going to be subject to Social Security tax, with the exception of employee number 5. Employee number 5 can only get taxed on a maximum of $176,100. And they've already been taxed on $170,000 of their earnings. So they can only get taxed on an additional $6,100. So the remainder of their current period earnings won't get taxed. And anything that they earn through the remainder of the year won't get taxed on that Social Security amount. All right, let's go ahead and clean that up a little bit. All right. So even though we have current period earnings of $21,900, only $15,500 is subject to Social Security tax because of this ceiling. It's the max amount that can get taxed. And the only difference is because of this employee number 5 who just makes way too much money. So let's go ahead and figure out the Social Security tax amount. That would be $15,500 times 6.2%. So that $15,500, the amount that we are going to withhold from our employees' paychecks for Social Security tax is $961. And lastly is Medicare tax. Medicare tax is going to be 1.45%, there it is, on their entire earnings. So entire earnings during the period was $21,900. So if we take a look at this, we can determine their net pay by taking their gross pay and minusing out all of the taxes that have to be withheld from their paychecks. So $21,000, let me do it the long way so you can kind of see the process. $21,900 minus their federal income tax withholding, minus their Social Security tax, minus their Medicare tax. So the net pay, the amount that is going to be on their paychecks as a total, I know it will be broken up by employee, but the total amount on their paychecks is going to be that $15,371.45. So that kind of begs the question, well, how do we journalize this? And actually what we did off here to the side is going to be our biggest help, right? First thing to remember is that gross pay is our total payroll. So this is going to be the total amount we expense. Depending on your textbook, this may be called a few different things. Might be called salaries and wages expense, salaries expense, wages expense, or maybe even payroll expense. I'm just going to call it salary and wages because that's what I see most often. And our total salaries and wages expense is the $21,900 that we are, that has been earned by our employee, right? Now, our taxes are going to go in there as well. And this is another one where you might want to take a look at your textbook and see how your textbook refers to these accounts. I'm going to do them according to the ones that I usually use. Federal income tax withholding payable. That payable is important because the payable is basically indicating that this is the amount that is going to be. Sorry, one second. Let me clean that up and then I'll start talking again. This is going to be the amount that is going to be sent to the government for their federal income tax withholding. That way, when they do their tax return at the end of the year, the government knows, oh, we already have $5,250 of their federal income tax. Let's see if they owe or if they get a refund. Next is Social Security tax, the first of our FICA taxes. Social Security tax payable. Again, that payable is important. Your employer does not get to keep that. $961. And then for our last one, Medicare tax. Again, payable, very important. $317.55. And then our last one, the amount of their paycheck, that net pay, which, just a reminder with debits and credits, let's just do this real quick. We see if we take a look at our total of our debits and our total of our credits, they don't equal. So we obviously have a plug here. That's going to be for the employee's net pay. So I'm assuming that we're not paying them the very next day or right away automatically. So this is going to be salaries and wages payable. $15,341.45. And now if we take a look with that plug, our debits equal our credits. Our next one is going to be our payroll tax. Now, this is the entry that is going to capture the payroll taxes that the employer is responsible for paying. Technically, these taxes that were taken out of the employee's paycheck, the employee is paying them. The employer is just basically sending them off to the government on their behalf, right? Now, the employer, though, has to pay their own series of taxes. They have to pay Social Security tax, they have to pay Medicare tax, and they have to pay this SUTA and this FUTA. So let's grab some of those. They have to pay Social Security, Medicare. Just grabbing this for the formatting. There you go. And then they also have to pay SUTA and unemployment to the state and FUTA. Now, Social Security and Medicare, we already calculated those. Those can just get grabbed. SUTA and FUTA, though, we're going to have to deal with another threshold. So we see that for SUTA, 5.4% is applied to the first 7,000 of each employee's annual earnings. And the same thing for FUTA. So I'm actually going to get us another column here. Okay, let's clean it up a bit. There we go. So the amount subject to SUTA and FUTA can only be a maximum of $7,000 for the year. So when we're taking a look at our SUTA and FUTA, we're going to have to be very careful to make sure that we didn't already tax this or get taxed this amount previously. All right, so let's go through each one. Employee number 1 has already been taxed on $6,500 of earnings. They can only tax us on a maximum of $7,000, right? So that $6,500 is dangerously close to that $7,000. And we can even see here that they earned more than the additional $500 that is subject to tax. So really, for employee number one, we as the company are only responsible for paying tax on the last $500 before they reach their $7,000 threshold. Now, for employee number two, they've already been taxed, or we as the company technically, we've already been taxed on $30,000 worth of earnings. So we've met that $7,000 threshold. We probably already paid that off like several weeks ago. We're not worried about employee number two. We've already paid taxes on $7,000 of their earnings. Employee number three is below the threshold by quite a bit. And even if I added these two up, do that off to the side so we don't get confused. 2,300 plus 1,500, they're nowhere near the threshold. So we are going to get taxed SUTA and FUTA on the whole 1,500 they earn this period. And then for employee number four is already over the $7,000 threshold. So we don't have to pay any SUTA or FUTA tax for them. And then employee number five is way over the threshold. So again, we don't have to worry about them either. So really the only employees that were under that threshold was employee number one and employee number three, because their earnings hadn't reached that $7,000 threshold yet. So let's total that up. Let's see how much of those earnings we have to pay SUTA and FUTA on. $2,000. So let's go ahead and add that to our payroll here. So SUTA tax is going to be 5.4% of those $2,000 in earnings that are subject to SUTA. And then FUTA, and this is the one that I want everyone to be very careful of, because this is usually a very small percentage. Always pay close attention to the rate that's given in your textbook or on your exam. In this case, it's 0.6%. So 0.6% as a decimal is 0.006, because I'm moving that decimal place over 2 places to the left. So not 0.06. 0.06 would be 6%. This is 0.6%. So 0.006 times the $2,000 that was subject to SUTA and FUTA tax. So very small amount. Let's add these up and find their total payroll tax. Oopsies. Give me a second. All right, add all those up. $1,398.55 is our total payroll tax, I should say. Total payroll tax for Simi Company. All right, so let's go ahead and do those journal entries. Let's start with the taxes, actually. When we take a look at these taxes, it's the same idea as before. These are payable to the government. These basically, when you own your own company and you are paying employees, you're going to be filing usually these quarterly returns. Some of them are annual, some are done more frequently, but you'll be filing these returns to the government to say, here were my employees' earnings, and here's the amount of tax I owe, and here's my payment on that tax, right? So let's start with all of these taxes. So we have Social Security tax and Medicare tax to start. These are payables. So just to remind you of the basics, those are liabilities. In order to make them go up, we credit. So I'm actually going to, spoiler alert, skip a line, because I need room for my debit up here, because I know these are credited, so I know they don't go first. Debit's always first. All right, so we have Social Security and Medicare. Then we need our State Unemployment Tax Act tax payable and our Federal Unemployment Tax Act tax payable, which would be $108 and $12. Now we can see here that our credit side has $1,398.55, which is the total payroll tax, but our debit side is empty. So our debit side ends up being that plug, which is actually called payroll tax expense. So essentially we have one journal entry that is for the payroll, which really focuses on the employee's earnings, their paycheck, and the taxes that are taken out of their paycheck. And then we have another one for payroll tax, which focuses on the employer's for tax responsibilities and the total amount that has to be remitted to the government. Okay, so I'll go ahead and I'll include a version of this spreadsheet in the description below. That way, if you do ever want to go ahead and print it out, try it again for yourself, you have it. All right. I'm also going to try to include within hopefully the next week some more resources for payroll on the TLC Tutoring Company website. But thank you so much for listening. And if you have any questions, feel free to reach out. And until next time, happy studying. Keep up the great work.